That's the NGX, and I'll be going to the wall in a jiffy. Director, are you ready for me? Oh, okay. I was told no wall. So let's continue. So let's see the numbers right now on the screen. The equities market saw some kind of slight sell-offs on Monday as the benchmark all-share index declined by about 7 basis points to about 47,251.93. The year-to-date return settled at around 10.62%. If we move over to other markets, talking about the currency market, the Naira appreciated against the US dollar to 416 Naira 25 kobo. What you're seeing right now on the screen are other African markets. The GSC opened in the green today. I think Kenya traded in the red on Monday. Let's quickly move over to other markets across. That's global market now. Talking about the United States, we saw that stock futures were a little bit unchanged in early trade today after the Federal Reserve Chair Jerome Powell said the central bank is open to rate hikes to combat rising inflation. The Fed of the United States has raised rates already. There is the anticipation that the Fed Chair Jerome Powell and his team will likely raise rates again this year. In fact, 6 more times. Our MPC did meet yesterday and did not raise any rate. Meet MPR, liquidity ratio, and CRR. Dr. Hassan Mahmoud, the Director of Monetary Policy Department, will be with me shortly to explain why those decisions were taken. Okay, let's move over to Europe and see if it's a bit different. Can we see those numbers? European markets were a bit higher this morning as Ukraine war and inflation still weigh on sentiment. For the Asian folks, Hong Kong still led the gains in Asia, rising about 3% as Alibaba shares pop a gain of about 11% overnight. Mainland Chinese shares also closed mixed. Let's check out oil price. The almighty oil in Nigeria. Oil prices are extending their gains this Tuesday. Brent crude is trading around $118 a barrel, while US crude it's around $114.32 a barrel. Okay, is there really so much change there? Okay, those numbers you're seeing is as at that time, but I'm taking a look at the live numbers right now here. Okay, what else do we have? Do we have gold? See how gold is trading, because in the last 2 weeks or 2 weeks ago we saw that gold crossed the $2,000 mark, but as I speak, gold is flat around $1,936 an ounce. So let's see how that goes. Other metals or other commodities that we're also tracking this morning, palladium used by automakers is falling by 0.5%. Silver is also falling by 0.5% to around $25.32. Palladium is trading around $2,572 an ounce. All right, those are the numbers for you. Let's quickly take a break to bring in my guests, and we will be discussing the morning after. We'll be analyzing the March MPC's decision and some other things around the MPC and monetary policy. Dr. Hassan Mahmoud will be joining me after the break. You can send your comments and your questions to all our social media handles to stay.
In my response, when I was reading the communique, I reiterated some factors responsible for the prices. Of course, aside from the Russia-Ukraine or the Russia-Ukraine war, has resulted in a situation where crude price has increased due to supply shortage. And of course, for Nigeria, like you know, aside from this issue of crude price rising, Nigeria has not been able to meet its export quota, primarily because of unwarranted oil theft that we see today in our environment. And this obviously has resulted in the increase in the price of diesel and petrol all over the world. Just yesterday, in fact for the first time, on CNN I watched where they said tanker drivers are also refusing to drive, or because there is no fuel, diesel, or because diesel prices have also gone up and all that. Or cases where, because of the Russia and Ukrainian crisis, what we have seen is that because between Russia and Ukraine, for instance, on wheat and even some elements in maize, they supply close to almost about 35% of the global volume available for these grains. And because of the war, there has been supply shortages that have also resulted in the rising price of not just petroleum products, but also on food prices or the prices of these grains. The increase is so astronomical that it is currently creating a lot of problems globally and ultimately the global inflationary pressures that we see today. But what are we doing? Like we said again in the communique, we are concerned that, MPC was concerned that the inflation that we're seeing from the core side came primarily because of supply shortage. Because if you check primarily whether in Abuja, in Lagos, or most of the centers, there still remains fuel queue everywhere. So what you find is that because there is this fuel queue arising largely from supply shortages, there is arbitrary increase in prices by retail marketers because they are not sure whether they will get more diesel after they've sold their stock. In fact, they are pricing what they are holding based on their expectation of their replacement price. So I don't know, somebody was saying yesterday when I was at the session that even the price of diesel had risen to almost about 700 or even 800 naira per liter. So what are we therefore saying? We will try as much as possible, and we were told at this meeting today by the representative of finance, the PAMSEC finance, that the Minister of Finance and the NPC are holding engagements to see to what can be done to make sure that adequate funding is provided so that petroleum products is made available, so that they can be imported and then all our filling stations can have these products. We are also saying we'll be engaging in NPC as well. If there's any kind of intervention that we can provide to help it, make it easy for them to bring in these products, so that this shortage can stop, then we will see that when supply increases and people are relatively confident that when they sell whatever they are holding, petrol or diesel stock, that they can easily go and replace them, then the arbitrary price increases will reduce. When the arbitrary price reduces, of course, you can begin to see that there will be gradual moderation in the price of this product, which would ultimately result in the moderation in the prices of other products whose price would have gone up as a result of the arbitrary increase in the price of these items. This is simply how we think we can work with the CBN. Secondly, MPC also noted that because of the turnaround maintenance of most of the or some of the generating stations, right, power generating stations, that they had to shut down. Shutting down has resulted in what I read again from some circulars from some of the discos, that there was a shutdown, a collapse of the grid. Whereas that was the case, it is just shortage because all the generating companies are shut down, and because they are shut down, there is blackout, and when there is blackout, what you find is a lot of people go to buy diesel, and also the demand pressure, food pressure on prices, and then this is like a continuum. So what we are trying to say here is that the CBN has always been there to support to support the power sector. Like you all know, we've disbursed over 1.3 trillion naira in the last 5 years to support both the generators or discos, or to acquire equipment, or to buy meters, or to even improve what is being paid to electricity generating companies so that they can continue to pay for their gas, and then the system can continue to operate. We will be engaging also with the Prime Minister and NBET and NEC to see whatever we can do to support them. And of course, we will also, thirdly, to ensure that we're able to continue to moderate food prices, because what we find is that there are some excellent exogenous factors that are outside our control are coming from the impact of the Russia-Ukraine crisis. But if, for instance, that has resulted in pressure on core side of the inflation, so what we're saying is that on food, where we're seeing some moderation, that our Development Finance Department should see what can be done to continue to aggressively make sure that we improve on our Anchor program, improve on all other programs that we have that is meant to boost agricultural output. If agricultural output in our various products are improved, what you will find is that we will see a further moderation in food inflation, which may help to dampen the effect of the rise in core, thereby moderating effectively at the headline inflation. So if these actions are taken, finance, we've done some bridge finance of almost about 200 billion naira for that purpose. The remaining sums, the asset managers are going to be going into the data room to see the numbers, to determine the viability of those road traffic counts, Lagos Ibadan, Abuja Kano Kaduna AKK project, as well as the second Niger bridge, which is almost completed now. So I'm sure we are only meant to complete the funding that federal government has put into it before now, and so we will do it. And the PAMSEC Finance, who also is assisting, at least in terms of collaboration between monetary and fiscal, also assured that the pipelines of infrastructure projects that will be looked at, but of course, Infracore being an issue that looks at the commercial viability, we look at each of those projects, determine their commercial viability, determine particularly how will revenue be raised and realized, how will revenue be realized to fund those, to repay those loans, and from there they will be done. So I believe we're on a fast mode. The 2023 and 2022 will be a very, very aggressive year in the tenure of Infracore. That will be the update. International Monetary Fund, I have to admit, has been a great supporter as well as advisor to the Central Bank of Nigeria and to Nigeria, because it's important that we underscore the markets for us to draw on the RFI facility loan. Nigeria got the highest in Africa of almost $3.4 billion. It has helped us, aided us in resolving some of our problems, particularly during the period of COVID. In 2021 again, when they also saw, is it the second or third wave, IMF came up again and said, look, they were going to increase the special drawing rights, the SDR, and we also benefited to the tune of even above $3 billion. So have they been very helpful? I like to underscore it, that they have been extremely helpful to the countries that are working with them. I guess when you appreciate somebody for a good job, hopefully they will do more even in 2022 and 2023, because no doubt I have read that even central bankers are already talking that, look, this Russia-Ukraine crisis, how it is affecting them, and how they will need some kind of support and bridging support to be able to overcome some of the challenges. However, in terms of advice, I think it's important that we reiterate the fact that the Central Bank of Nigeria remains a development finance oriented central bank, and it is normal, it is very, very normal for an emerging market or developing economy to deploy development finance tools through interventions to support the growth of the economy. Let's not forget, about 2 years ago, monetary policy said that our new thrust will be price and monetary stability that is conducive to growth. If we are to adopt price and monetary stability that is conducive to growth in an environment where there is a tight fiscal space, where revenue shortfalls abound, and even government has to borrow, then I think it is just reasonable that central bank should step in to support the fiscal, to fill that space, not through grants, but through loans to our smallholder farmers, through loans to our small and medium enterprise businesses, through loans to our households, through loans to wake up our manufacturing industries that are dead. And I can say that in the last 2.5 years, we've done certainly more than 3 trillion naira. Whether we like it or not, and IMF themselves agree.
All right, welcome back to the program. Welcome back to this segment. We had to take you through that in case you did not see the MPC's briefing yesterday after the one-day policy meeting. I did tell you at the beginning of the program that the governor did announce why that two-day policy meeting usually became a one-day policy meeting. I won't go back to that because he announced it yesterday. Dr. Hassan Mahmood, the Director of Monetary Policy Department at the Central Bank of Nigeria, is with me as usual. Dr. Mahmood, good to see you. Every 88 weeks.
We meet here.
Shouldn't we break it? Or it should just be 88 weeks tonic?
Well, it's statutory meeting, so we'll follow that protocol.
Yeah. Okay. So
nice to be here. Thank you very much. Yeah.
Welcome to the program. Where do we start from? In fact, in the last 3 weeks since Russia-Ukraine crisis started, part of my analysis and even the question that I posed to most of my guests when we're talking about economy and perhaps some of these positions and actions we've been seeing from Russia-Ukraine, part of my questions to them were, in January MPC, there was no Russia-Ukraine. March MPC, Russia and Ukraine will so much future. And you guys did not disappoint me yesterday because there was no Russia-Ukraine 8 weeks ago. What were the major sticky points that were really considered at this March one-day policy meeting? What were really the major sticky points?
Okay, thank you very much. From the global scene, 3 critical issues. One, like you said, Russia-Ukraine. And this is important because Russia-Ukraine are important in the global ecosystem in terms of commodities. Combined, they are the largest suppliers of wheat and other cereals. They take global, about 65% of global supply of sunflower, into urea, potash. All those are inputs for fertilizer. We import part of that. The biggest importer of their wheat is more or less Egypt. We saw recently Egypt has already started depreciating their currency. They're also exposed to the IMF. So they're a major player in the global economy. In the oil and gas sector, outside of the OPEC, Russia is the largest producer in that space, particularly for the European economies. That's where the major consumption takes place. So you see that developments in Asia. Then you have the sanctions. Their central bank reserves was frozen. All investments in the international financial market that are Russia-related are also blocked. Other countries are already not banning the import of Russian gas, Russian wheat, and Russia is also banning the export of their products. So you see that crisis crystallizing. How is that important to us? One, because we are also playing a part in the importation of some of those products, you see imported inflation already crystallizing in Nigeria. You saw the numbers for the recent inflation numbers, core inflation picked up.
Okay, Dr. Mahmood, just hold on a bit. Let's quickly take a break. When we return, Dr. Mahmood will continue the analysis on the MPC. Do stay. Hello, and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to the least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery. We need to come forward and do something different, so that we move from a situation of looking at things from purely a consumptive approach to
a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy Naji. It's so nice to know that you're joining us again today. Welcome back. Dr. Hassan Mahmoud, the Director of Monetary Policy Department at the Central Bank, is still with me. Dr. Mahmoud, just before we went on that break, can you just land on some of the points you were making?
Yeah, we were on the Russian-Ukraine crisis, and I was just mentioning the importance of that economy in the global scene and how it affects us. Those products that I mentioned, those commodities, including the minerals, already the prices are already going up globally. So those that are going to be importing that as part of their inputs are already building that into their cost. Of production. So you see that affecting prices, energy prices, and how that feeds to global aggregate demand. And that's why even at the global scene, the projections for output growth is already being moderated downwards because of the impact of that. The other important factor in the global scene also has to do with the high inflation in advanced economies. It still has been persisting, and most of the economies are already, you already mentioned here now that the United States is already tightening, is already starting to do their normalization and asset buyback. The European countries, compounded with this Russian-Ukraine case, is also going to be having a lot of issues in that on that scene. So you see interest rate going up at the global scene. Implications of that is credit flows, foreign capital flows to developing and emerging market economies will also slow down. Rates will go up. Instruments or facilities that we've taken that are dollar denominated or foreign currency denominated, pay back now will be costlier. So that's another side of it because of that action in February, slightly particularly coming from core, even though food inflation numbers went down. We see that the GDP growth numbers are still a bit fragile, even though quarter on quarter for the last 5-6 quarters, GDP has been growing. If you analyze or take year-to-date numbers, you see that maybe from this third quarter to the second quarter, you see that the numbers decline. But if you look at it quarter on quarter, GDP numbers are actually growing, but that is still fragile because it's confronting a lot of headwinds that are likely going to impact that. The external sector is also seeing still high volumes of import, so you see the balance of payment position, also the surpluses we had just after we came out of the COVID is already narrowing gradually because we still have huge import without to follow that. The RT200 of the central bank and other affecting food items getting to the market, particularly the urban centers, is still an issue, and other frictions we have within the domestic economy. All the factors that are being considered to take the decision the MPC members took.
Okay, let's take a look at some of the decisions. I don't want to go into the core decisions because we know that the MPC has maintained status quo for close to 17 or 18 times in the last 2 years or even more than that. What I really want to ask you at this point is part of what the central bank governor did talk about, or the MPC chair did talk about yesterday, is that higher energy cost, higher transportation cost, higher transportation costs is also impeding logistics, which is also inflationary. I want you to explain in simple terms to Nigerians right now. Help them understand this, because also part of what was said yesterday is that inflation would considerably be high. We are in uncertain terms. What I guess that many Nigerians would hear is that prices will still remain high or be higher. So explain to Nigerians.
Okay. Why inflation is very important is that it erodes your real income, in the sense that even if your earnings, your salary or whatever that you are getting remains static, if you are earning 100,000, for example, every month, and it remains static, but inflation numbers are going up, the value of that 100,000 is reducing. So as you go to the market every other month, as you get your salary, your 100,000 is becoming 80,000, 70,000. So if you have been eating rice and other things, you're moving to gari, you're moving to less favorable nutritious foods that you want. So it erodes that real disposable income, and that is why it is very, very critical. I don't even want to go to the investment side, because that is not the key side that bothers the poor people or the generality of the people. So it is very important that, one, inflation is low, and two, that it is stable. It stays, prices remain moderate. For those that travel around the country, you go 5 years and the price of a particular thin bread is the same after 5 years. It's because the inflation numbers are just low and stable. So you can predict, even the producers can be able to predict that, okay, if I do this and I have a projection for the next 5 years, this is going to be my return. Inflation will not wipe it out. So it is important that we have that. And what will drive, because it's a function of demand and supply, what will drive prices down will be supply. If you have enough of it within the space, commensurate with the number that the people need, we have that balance, then you see the prices are moderate. It is also important to emphasize that if what is supplied is more than what the people need, then those that are supplying will also suffer, because so much in the market, the prices go down, so they are not able to sell off and continue production. In the same vein, if what is supplied is far, far below what the market requires, like the volume that the individuals require within the economy, because everybody wants it, particularly if it's like food. Whatever it is, you must eat. But if it's like food, then you start seeing, because of that small quantity, those that can offer higher are able to clear the market, while those that don't have the resources to beat that higher prices are left out of the system. So it is important that we have that, what we call equilibrium, that balancing of that space, so that the production meets the demand of the economy. When we go to the second stage, that's when we start talking of earning revenues for the economy, such that if you're able to feed the domestic economy, you now export. The export now brings some inflows, and that will help in other areas, government revenue, your own personal earnings, and all that is important. So the central bank's primary mandate is to watch that prices and ensure that the prices, one, reflects the fundamentals of the economy, two, the activities that are within the economy are able to drive that supply to that stage. So when central banks comes and start talking that, we cannot bring down inflation because structural issues are playing a role there, you cannot, because the supply side is more rigid. You cannot produce rice because we need it today, produce it tomorrow. You have to plant it, you have to weed and everything, and it has its own gestation period, 3-4 months. So that short period, we need to create a strategic loop where, even though production is not going on, that is farming and whatever is not going on, there's enough in the market till the next harvest season. So those are the sequence that things need to be, so that supply is maintained, is sustained over a long period of time, and then prices remain moderate. I think that would be kind of simple narration I will give in terms of the role of inflation, how demand and supply play a role in determining the prices.
Okay, for what we're experiencing right now, because the past few weeks have been really so harrowing for many Nigerians, rough and tough. For what we're experiencing right now, would you say is more of a supply side disruption, or more of a demand pressure, or more of perhaps Russia-Ukraine adding to logistics concern, or it's about our domestic problems that were also heightened by these exogenous factors?
Nancy, I think it's all of the above. They play a role, but in different proportion. How will the Russia-Ukraine case come in here? I mentioned their role in oil prices and gas, diesels, and now, even though we talked about food inflation and the cost of food items, there are inputs to food production. If you produce the food in the villages and in the farms, you need to bring it to the cities where the demand is. You're going to put them in vehicles, transportation, prices of PMS and diesel. Those that are going to do those logistics and take it to the market will build in that cost to the cost they bought it from the farms to get to the you have storage. So by the time the cost of petrol and diesel goes up substantially, definitely will feed into the cost of the foods. So you see food inflation going up. So you need to also look at those inputs. The roads, if it takes you, usually if the road is good, 1 hour to get to a particular destination. Now because the road is bad, it's taking you 5 hours. Or even there's a stream there that has cut off the road, so you cannot even go through. Those logistics are also very key in determining the end price. So the cost and efforts that it takes for you to get those products to the sales point builds into the cost of production. So you see prices going up in that area. Insecurity challenges also distort that supply chain, in the sense that because some cases that we've had now is farm products are not even, you are not allowed to, we don't allow you to harvest your product or bring people like the castle rostering and stuff like that and pack those items away. Those are security challenges that stop production from farm gates to the markets, to where they are going to be required. So those issues play a very big role. The structural issues relates to infrastructure, power, these roads that I'm talking about. Which
the fiscal authorities should take.
Well, which everybody should play a role, because the argument now is the private sector should also be empowered to invest in these areas. The infracorp and other investment vehicles that have been created are to also relieve the fiscal authority, because we are seeing the role of the fiscals being constrained largely because of these inflows. We talked about the oil and issues around the supply revenue inflows. There was a time here that for 3 consecutive months nothing came in from for oil exports, so the FAC was not having anything from oil. NNPC declared zero. So you see that is straining the government largely. So government does not have that, war chest to embark on some of this basic infrastructure, which you need, because the farmer that is going to produce his food does not need to do the road. So other people need to provide that, which is a public utility, for the general public to use. So government needs to play a role in that side, but we're also conscious of the fact that there are limitations to government fiscal space, so we can't get that done. So there's a need for a private, and that is also why you see a lot of this is being shouldered by the central bank. This development finance interventions, we can't just sit down and say, well, this is the role of government or fiscal authority, so we'll just produce. If it doesn't get to the market, fine, we've not achieved anything.
Okay. If we take a look at this, because I've heard a lot of people say that even before this meeting, what will be the response to the notion that MPR does not carry any effect anymore? Bearing in mind, MPR 15.7%, so it doesn't really match up. It doesn't really carry that effect anymore. What would be the response?
Well, I think let me explain this. The MPR is supposed to be a signaling tool. How it operates, and you always emphasize that I go very, very simple. But this area will be a bit difficult for me to go very, very simple. The fact is, the monetary policy framework we operate, monetary targeting means we target the volume of money in the economy, because the monetary theory is of the fact that the volume of money in the economy determines the prices of domestic goods and services, with other assumptions behind that thing. So what central bank does is to control that volume, so that rates and prices will be moderated. And that's why sometimes if we don't use the MPR, we use other instruments within the banking system, CRR and other tools, almost to tighten that space so that we don't have, because if there's too much money in that space, the rates, OBB, Treasury bills fall. The ability to raise funds, even for government, also is highly disturbed because banks don't want to get into that space. The more the rates go up and reflects the fundamentals of the market, the better for what's called savings mobilization in that economy. So MPR, yes, there's this argument that the transmission mechanism is weak in the sense that it does not necessarily mean that if you increase or if you reduce MPR, it's the other way around. If you reduce MPR because you want to expand credit growth and other, yes. If you reduce MPR, it does not necessarily mean that the banks will reduce their interest rate, because other factors play a role in that cost of fund to the banks, including these structural factors and infrastructure issues that we have mentioned. So the premium that banks build into cost of fund is MPR and other factors. So what we are saying in this space is that MPR is a signaling tool, but those other factors also play a role. If you don't take care of those other factors, then the sensitivity of the bank's rates, lending rate now, to MPR will be extremely weak. So that is the point. So but Central Bank uses that as a signaling tool, that this is where we're going. We're likely going to be tightening. That is supposed to change the behavior of investors in those markets and also determine what we call inflation expectation, what people think prices will be, because it determines their production levels.
Just as we close, what do you think that Nigerians saw from the MPC of yesterday? Is there a tightening signal? Like at the beginning of the program, I did talk about Fed Chair Jerome Powell. He's come out openly to say they've tightened already. There will be 6 times. I was listening to him, was it yesterday or so? He said at least as they'll be watching the situation and seeing how things go. What kind of signal did we get from you people yesterday? I was trying to gauge, are you people hawks or you are doves? You've been doves for a very long time. But I also try to read between the MPC. Okay, inflation would be a bit considerably high. The condition is still uncertain. So I was also trying to see, okay, if Russia-Ukraine continues, inflation continues to grow, and whether you tighten. Just tell me what you people.
Okay, this one I will say it in simple terms. There are 2 markets we're looking at. We're looking at the investors and the players in those markets, and then we're looking at the generality of the populace. The governor has emphasized that is preference for that generality of the populace, the general public, the rest of the economy, the highly vulnerable people. How is the MPC decisions impacting on them? And what is important is how are we able to stimulate that sector of the economy to either continue their production process so that people retain their jobs and their incomes, and that income has real value working at the inflation. Then the other side is to look at these investors. How are we able to mobilize the resources that are needed, capitals now, for investment purpose within the domestic economy? Don't forget that individual borrows, the government also borrows, so we need to create that investors environment where the rates, money market rates or fixed income rates, are reasonable for that to attract inflows. Then the third part is to look at also foreign investors, because we know that domestic government capital is not enough. So we need foreign investors. So we're also looking at that bucket, at our fundamentals, attractive for foreign capital inflow. So 3 different buckets that we are looking at. But what is important is from this MPC, what we'll see is that 1, the MPC members are kind of already, some members, there was a member that voted for 50 basis point increase in MPR. 3 other members, 0.25 25 basis point increase in MPR, and the other 6 now voted to hold. That means the MPC members are already getting sensitive to these fundamentals, particularly inflation, particularly shocks from the external environment, that we need to start Ghana, Egypt have already started adjusting rates. We play in the same global space. We're all looking for international capital flows. We're also looking for how to improve employment and make GDP, our growth, inclusive for a large number of people. So we want a situation where everybody is able to, benefit from these policy directives of the central bank and the fiscal authority. You see that the central bank governor was also emphasizing, the MPC was also emphasizing that the central bank should collaborate with the fiscal authority to address this, to address that. So there's a need for teamwork in that space to be able to have a kind of holistic approach. Monetary policy is more for short-term demand-side management. Fiscal authorities deal with supply-side, infrastructure, long-term structural issues. So there's a need to marry the two to be able to get a kind of a comprehensive benefit to everybody.
Thank you very much, Dr. Mahmood. I hope we've been able to do justice a bit. I know there are many issues, but just like I said earlier, this is once in 8 weeks tonic. So thank you for coming.
Thank you for having me.
I've been speaking with Dr. Hassan Mahmood, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. We've been trying to unpack the decisions of the MPC that was held yesterday. So many things to still look at. Continue to watch the program subsequently for more. That's so much we can take on today's edition of the program. I am Nancy Naji. Be the best you can be and be that change that you want to see. I'll see you all again next time. Bye.